Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York on Tuesday, 11th day of March, 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals markets with gold trading higher. The rest of the complex trading lower today. First to gold, 1347.48, high 1354, low 1337.20. Currently trading at 47.48, puts it up roughly $8 on the day. Silver is trading in essence unchanged, 2080 on the board. That's 2080, 2090. That's going to be your bid-ask spread looking at a 240-minute chart. You can see that we're down near the lows. Low today is 2060, high 2142. More on silver towards the end of the show. Traders, there's no doubt we have a nice opening today and trading activity in the gold market. Let's go ahead and compress this 240-minute chart. And as you can see, trading 1348, so we're up $8-9 on the day. But we still have one major barrier that we need to get through, and that's this tower tops right here and right here. This is our tower tops. And in essence, that's what's showing us resistance, because the market is trading just under 1360. On the last two occasions that we have seen this market actually attempt to move, meaning here and here, it was unable to do that. You can really see that, of course, on this intraday, but when we move to a daily, it even becomes more apparent. And this is what I'm referring to. Daily chart, standard candlestick format. And if we look at the recent activity, and this is really, if we consider the fact that ever since the beginning of March, we're now, in the 11th day of March, because just prior to that, we had tops below that. But just as March started, market does spike up, but it hits this first area of resistance. There's no doubt, as we talked about yesterday, 1, 2, 3, 4, and now the fifth day in which we have had highs near this point, but we have not been able to exceed it. And as I said, that to me is disheartening. The fact that the market is trading in this range is a good sign. But we really need to see it begin to try to break through, even if it breaks back below. And here's what I'm talking about. Steve Nissan has termed this particular pattern a scouting party. It's not a candlestick pattern, but as the market moves up and it goes to a various resistance point, what typically will happen is you will get a trading day in which the market rises above that particular resistance level, but will typically close below. And you'll get a couple other days where it will rise above that particular area. And that is what he calls a scouting party. In other words, in essence, when you've got a market where you have a scouting party, the bulls are really testing the fortitude of the bears into seeing if the bears have enough power to really bring that market down. Now, the other way to look at it, and it's the way that I am hoping we see this unfold, is that basically what we're seeing is, in essence, a base forming, and the market is building a base. And as we've talked about, you do get markets where you'll get a rise, trade sideways for a while, you get that rise, and it's building its base. In other words, it's finding collective support here. So whether we look at the glass as being half empty or half full, I tend to look at it as half full at this point, because we do have this area right here, roughly at around 1330, where we've got real good support. And when you consider the fact that this market has had this dramatic rise, in which, and this rise right here, I've looked at one of the major breakouts coming at around 1260, which would be right here. And that's that intersection really when, let me try to line that up. You can see that it breaks out right here. This is about 1250, breaks out right here, then breaks through that long-standing resistance line. And typically, it's not that unlikely when you get this kind of a market rise in which we have seen the market move roughly $100, that you'll get somewhat of a pretty healthy retracement and then move back into that upward channel. So the fact that we're not getting that deep retracement, and we talked about the fact that even on the way up, The characteristics of the market was spike, shallow retracement. So spike, shallow retracement, spike, shallow retracement, sideways, spike, shallow retracement. Comes up, sideways, and then spike, sideways, spike, sideways, spike, and then sideways. And so it really, to me, appears as though we're building a base, and we'll have to see. But I will tell you this. We had an inflow of dollars into the electronically traded funds that were at records. We haven't seen that amount of tonnage move into that particular trust since 2012. There are signs, there are definitely signs that we not only have hit the bottom in gold, but we are slowly moving back up the channel. And then again, as we move back up this channel and we really move off of these lows and then take a step back, and we've been talking about this for the last couple of days. This is that big macro view in terms of our major count. 1, 2, wave 3. I believe we've completed wave 4. I believe that we're currently in wave 5. If that's the case, then we are in an impulse phase. If we're in an impulse phase, then we're going to see really more than 2 waves. We're going to get probably a 1, 2, 3, 4, and 5, as opposed to in A, a B, a C, same direction. A, B, C, you would then go 1, 2, 3, 4, and 5. Big difference, because here, A, B, C, huge, tremendous difference in that. What we'd be looking at, of course, would be a continuation of that bearish trend. My sense is when we look at it from this big picture, and as I've been talking about over the last couple of days, we need more technical evidence to affirm this unequivocally, so to speak. But for right now, it does appear as though this is a very, very plausible model to look at. So to me, in terms of our numbering here, I'm not so concerned, because what I'm looking for, irregardless of what we have in terms of a count, if we continue in the bear count, my tendency right now, as I said, because of the way we can take a look at this falling in terms of guidelines, 61%, we're definitely within the parameters of a good model here. But this will probably be, rather than labeling it as an A, this is probably going to be a 1, a 2, and a 3. The question is, where's one going to take us? And the key is, with our standard Elliott wave count, wave 1 is our benchmark. So there's really very little we can do except look at previous wave 1s, but very little we can do to actually ascertain with any kind of certainty that this is the length, or this is the model we should use for that first wave, because we will then take wave 1 and look at a retracement percentage. We will then look at wave 3 as a ratio of wave 1, meaning since it cannot be the smallest, it's either going to, wave 1 will equal wave 3, wave 3 will equal wave 1 times, and then you go into the different fib numbers. Whether you go, it's going to be 20 times 123 or 138 or 161. It's in multiples of wave 1. Of course, wave 4 is a retracement off of wave 3, and wave 5 is typically equal to wave 1. So it's all about wave 1 being our benchmark, and then from there we can ascertain really the rest, the next upcoming 4 waves. And traders, honestly, the more I look at the simplicity of this model that we're presenting to you, and the numbers, the way they're kind of fitting into sequence. And when I say the numbers, what I'm talking about is from here to here, 38% retracement. Market moves up here. When we look at an extension, the extension is a fib-based extension. If I am correct, it came out to, I think, 178% extension off of this wave 1. Wave 4 now falls within its parameters because you get your 61% retracement. And if that's the case, we are in wave 5. And ladies and gentlemen, if we're in wave 5, it's a whole new ball game. Now, even if it's a whole new ball game, I hate to say this, but silver did not get the memo. Under pressure again. Stops either have been hit, depending on where you put them. 60 was the low today. Our stops are at 50, but my sense is that if it does break through this particular area here, and this, of course, is 2050 right here, But if it breaks through this support level, the next, and this is the 2050, really you don't have anything until about call it 1980, 1985, and that would be this level here. That's at 61%. Silver, of course, is not acting as bullish as gold. It is a little bit more volatile, and as I said, we're holding on to the position, but I don't believe that we're seeing the same kind of potential that we are in gold, and that's why, in fact, our gold is in profits and our silver trade is a little bit behind us. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.